The only way to invest in credit, to invest in fixed income, to have return without any risk on the interest rates is to invest in high yield.
Alain, today's European credit market dynamic is particularly high yield. Why is that?
Exactly. Today, the European credit dynamic is very, very strong, and high yield in particular, like you said. Why? Because ECB will start this purchase program next month. So it's very important, not for high yield, for investment grade, but globally on credit, the credit momentum is very positive. On high yield in particular, because we still have very attractive yield on high yield. And the environment and the macro environment is quite positive for companies. So we have technical positive momentum, but we have also behind the risk inside. The fundamentals for companies is in a very good shape, especially for Europe. So clearly, it's a perfect timing, I would say, a perfect environment to start to invest in credit. It's really not too late. It will start, even if we have seen quite a good start since the beginning of the year on credit general and in high yield in particular. I think there's a lot of room and there's still a lot of momentum to take benefit of.
High yield funds are generally associated with quite a high risk. What would you say to investors who are worried about that?
High yield is really depending on growth globally. And more than that, we just need a tepid growth for high yield to perform. Just to give you an example, it's the worst moment to invest in high yield is just before a recession. But today we have growth, and even tepid growth is just enough to have for high yield to make an absolute return, a total return, very attractive. So I will say that the main risk, of course, is growth. But again, because we need tepid growth, is not a big concern. What we think, we think our central scenario is not a recession to come. It's not that even if China economy is slowing down, we still have a very sustainable growth in Europe and in US, and it's just enough for high yield. For me, and in particular for some strategy, it's very important to be investing in for the moment. So yes, of course, there's risk. We can even think about some risk in Europe, for example, Brexit, for example, political risk as well. But honestly, yes, it could be a risk. It could add volatility to the market. But fundamentals are so good and technicals are so good that normally we should have a very good market coming along this year.
Okay, and so why should investors target mature high yield bonds instead of the traditional high yield bonds?
We have, like we said, we still have a lot of risk. We still have a lot of uncertainty. I will not say that benchmark fund and benchmark traditional high yield investment is not attractive, is not good. We are talking today with a specific particular strategy, which is target maturity fund. The very big advantage for this type of strategy is to have a clear horizon for target return. What is associated to target maturity is a target return. And what is very important with this strategy is with the time, the credit risk, the risk in general, will diminish. And that's very important because we know what's going on today. In 3 years, for example, this fund will be very short, so with much less risk. So in a way, I will say that today the risks are not so different, but with the time, the risk will be much different, and you have a big protection with this maturity regarding the traditional benchmark high yield fund.
Okay, and you've started a new fund. It's the Oddo Meriten 2021 fund, and you've recently opened that up to Swiss investors. Can you tell me a little bit more about that?
Exactly, we opened the fund 1 year ago already, and this is an opportunities fund. And last year there were a very good opportunity because spread widened a lot. And regarding to US market, we don't have risk and we have return. So it was a very good opportunity last year. This year we decided to reopen the fund because we have seen this opportunity to have large spread with not so much risk coming again in the market. So we decided to reopen the fund to investor because it's still a very good opportunity within the market to have return. The expected return, gross of fees today is roughly 5.5%, and today what we have for 5.5%, nearly nothing in the fixed income environment. So just consider that you know that we have negative yield on many asset classes in the fixed income. High yield is clearly the safe haven for the moment.
So basically what you're trying to say is that now is a really good time for people to get involved in high yield funds.
Yes, I will say it's a very good time to invest in credit. And if you don't like interest rate risk, because at one point the interest rate will rise. Of course, not in Europe, not today, not tomorrow, but what about in 2 years, 3 years? So the only way to invest in credit, to invest in fixed income, to have return without any risk on the interest rates is to invest in high yield. And regarding what we have in terms of risk today, with even the ECB will be buying corporate credit tomorrow, high yield is perfect to invest. I mean, it's perfect asset class to invest. Yes, you have risk, but you have, not so much risk regarding the return, and you have very well protected, particularly in this type of strategy, which is the target maturity fund.
Well, thank you so much for coming and sharing your insight with us today.
Thank you very much.
That's all from myself and Alain Krief. Thanks for watching, and remember to keep clicking back to Dukascopy TV.